It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this video newsletter on avoiding the downward spiral, how to prevent this common and devastating phenomenon from happening to you. Let's begin. What is a downward spiral? Well, it's a pattern that emerges when every trade you make seems to be a loser, and your losses begin spiraling out of control. Perhaps you promise yourself that if this next trade doesn't work out, you're going to quit. But then it doesn't, and you don't quit. Or you say that if your account balance falls below X, you're going to take a break. But then your balance does fall below that level, and you keep trading without stopping to reassess what's happening. This is a downward spiral, with many consecutive losses or at least a very poor win ratio. Often this emerges from a gambler's mentality, the idea that all you need is one big score to get even with the house, or that since you've had so many consecutive losses, you're bound to have a winner, right? Wrong. Many consecutive losses does not improve your future odds of winning. In fact, all it means is that you're probably doing something wrong. If any of this sounds like you, or if your primary purpose for trading is pursuit of the high that comes along with a winning trade, then you may be developing a trading addiction. In this case, you should take a break from trading for a while to clear your head. However, it's not only addicts that fall victim to the downward spiral. Let's continue. All traders, especially novices, can fall victim to performance anxiety, which often results in, or can be the result of, a downward spiral of losses. Short and intermediate term traders are supposed to be systematic and methodical. Emotion is supposed to play no part in the process. Conscious thinking is supposed to be minimized. Thought goes into the development of your trading system, but for it to be executed, minimal thought should be necessary. In this way, trading is similar to many athletic pursuits. NASCAR drivers don't think while they're racing. There's no time to think. They're well-honed athletes who react almost instinctively based on their training. The same can be said for baseball players hitting 100-mile-an-hour fastballs. If you stop to think, you become self-aware, and this can lead to anxiety. Worse yet, you can start being worried about being worried. None of this fear or anxiety is conducive to trading profits. Instead, you need to be like Karl Malone. Karl was a very poor free throw shooter until he developed a famous ritual at the foul line. This wasn't something he was self-aware of. It was automatic. He was almost like a machine at the free throw line, and this is how successful short-term traders are when it comes to executing their trades. Of course, to act automatically, you need to have a plan. It needs to be a written plan. You also need to document the results of that plan in a trading journal. Periodically, you need to reassess the effectiveness of your plan, and if it's not working, you need to fix it. This is where serious thought should be invested. Don't let yourself get into a downward spiral. If your system isn't working, stop and reevaluate. Here are some specific problems you can watch out for. 1. Trading out of boredom. Never make a trade for anything other than the only legitimate reason, because there's a definite opportunity and the trade fits into your system. 2. Trading just to trade. This means you're trading when the overall trend of the market is not providing the right opportunities. Your system should never be market neutral. There are some situations in which no trades will make sense in any given system, and you need to account for that. It's okay to sit on the sidelines sometimes. Third, we have the opposite of this problem, being overly gun-shy. You need to be unafraid to take opportunities when you see them. Again, you should be essentially on autopilot. Being self-conscious is the only way any of these problems can arise, and once they do, anxiety and downward spirals are just around the corner. To recap, a downward spiral occurs when you sustain several consecutive losses or many more losses than wins over a given period of time. It often results in, or is the result of, anxious, self-aware behavior, furthering the downward spiral. If you find yourself in this situation, it's important that you immediately stop trading, take a break, and reassess. Be wary of addictive behavior. If you fall in love with the high you get from a winning trade, this can lead to disastrous repercussions. It's much safer to be systematic and methodical in your trading, and in your processing of results. Have a system written down and stick to it. Reassess it at regular intervals, or immediately if you find yourself racking up losses. We hope you've enjoyed this important video newsletter on avoiding the downward spiral. Thanks for watching, and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit tradingtips.com. Sign up for our free video newsletters. Become a successful trader by visiting tradingtips.com.